which starts post March 2025 is reduced to a substantial effect. Within the eligibility criteria of composition scheme, without filing this declaration, you will later be charged for. This is very critical for those dealers who are willing to opt for composition scheme, where RCM category has been broadened to bring certain other services under RCM. Welcome viewers, welcome to yet another deliberation on this busy season of the year ending, and it's March again. We are going to discuss today few important points which you need to be careful for finalization of your accounts for the financial year 24-25 with respect to GST. Since it's a year ending, it's March, and a lot of finalization that takes place, a lot of decision making that takes place. So with regards to GST, what are the key areas that you need to keep in mind so that we can have this annual reconciliation process, which starts post March 2025, is reduced to a substantial effect. So today we are going to discuss 10 important points which is relevant for GST for this March 2025. So let us go through them one by one. First, submission of letter of undertaking. For those dealers who are making zero rated supplies and you are supplying to SEZs, so basically those who are exporting your goods or services, they need to file a declaration in the form of a letter of undertaking in form RFD 11. The due date for filing of letter of undertaking is 31st March 2025. So it's very clear that if you want to export your goods or export your services without paying off GST, then you have to file this declaration. This is a mandatory form, and without filing this declaration, you will later be charged for payment of your GST on such export of goods or services. Do not forget to file your LUT by 31st March 2025 in order to avoid any kind of consequences for the financial year 25-26. Mind you, you're filing this LUT for your upcoming year 2025-2026. In addition to that, please remember Rule 96A of the CGST rules is also very important to be compliant with. What does that rule says? Let me just go through it very quickly. For export of goods, 3 months from the date of invoice, you need to physically export the goods. That is number one. Number two, for export of services, 1 year from the date of raising of such invoice, you need to receive the payment in convertible foreign exchange currency. So these two conditions are very important and vital in order to comply with Rule 96A, which is in line with filing of letter of undertaking. So if you are filing a letter of undertaking in RFD 11, that compliance is not complete if you are not compliant with Rule 96A. Point number 2, opting for composition scheme. Any dealer who falls within the eligibility criteria of composition scheme, the decision making to opt for composition scheme, to re-establish your cost sheets, to re-establish your sale price, whether a composition scheme is beneficial to you or not, the decision making is in this month of March, because within this month you need to opt for the composition scheme for the financial year 2025-26 if you are eligible within the threshold limit of your annual aggregate turnovers. So this is very critical for those dealers who are willing to opt for composition scheme. This month is very critical and should avail this benefit by 31st March. Just to add one more point, if you are opting for composition scheme for this current month of 31st March 2025, please do not forget to file ITC 03 within 30th May 2025 for those dealers who are opting for composition scheme. As we all know that those dealers are ineligible to claim any ITC. So all those ITC which are present currently in your electronic credit ledger dies out or drops, and that declaration has to be given through ITC03. This is the second point. Point number 3, QRMP scheme. This scheme was introduced for small dealers in order to ease the compliance of filing of returns. QRMP scheme stands for Quarterly Return Monthly Payment Scheme. Any dealer whose annual aggregate turnover is less than 5 crore, this is the month where they can opt for quarterly scheme of filing of your returns, the last date being 30th April 2025. If you are wanting to shift from monthly scheme to a quarterly scheme, this is the month. So you can decide. Yes, it doesn't, the due date does not end in 31st March, it ends in 30th April, but it's advisable to opt for the scheme in the month of March only, so that you can file your quarterly returns smoothly from the next financial year. So very important for people or for dealers who want to go for quarterly return monthly payment scheme, that is also known as QRMP scheme. Let us go into our fourth important March point. So the fourth important March point is implementation of new invoice series or new series for any kind of invoices, debit note, credit note, payment voucher, advance voucher, and self invoice vouchers, that is self invoicing. All those starting from April 2025 will have a new series and starts with obviously number 1, so that should be identifiable that a new year has started and a new series has started. So be very careful that 31st March is the last date, the last bill for this series ends. Post April, post March, that is from April 1st, the new series needs to be implemented. Going on to our fifth important March point. What is it? Reassessment of your annual aggregate turnover. This is vital. As we know that the GST Act maintains rules for various dealers who are falling within the annual aggregate turnover of certain limits for registration, for e-invoicing, for e-waybill, for QRMP, for composition. From every angle for these important areas, in order to avail the benefit, the most important identifiable marker is the aggregate annual turnover. So please reassess your ATO, rather annual aggregate turnover, and take a decision whether you are falling within the limits or certain extra compliances are applicable to you for financial year 25-26. You need to assess it in March and make your systems ready for this implementation. Just for example, for e-invoicing, the limit is 5 crore. So for financial year 24-25, if you are crossing the limit of 5 crore, your e-invoicing starts from April 2025. Hence, this is a major change, and if any dealer is crossing this limit of 5 crore, then they need to get their systems ready for this implementation. Key point number 6, reconciliation of your outward supplies. Now this is very important. Generally, we reconcile your outward supplies during the filing of annual returns, where we reconcile your turnover or your taxable turnover shown in 3B, GSTR1, and the turnover that is shown in your books of accounts. March 2025 can ease your pressure to some extent if you can reconcile your annual turnover in this month to the larger extent possible. So any outward supply, if you have missed, if you have missed, or if there is any debit note, credit note, if there is some invoices that needs to be amended, any GSTN number that has wrongly been put, those corrections can be done in the month of March, so that your reconciliation with your audited final accounts is reduced to a certain limit during the filing of your annual return. So you can reduce the pressure of reconciliation to a larger extent if you can reconcile your outward supplies in the month of March itself. Coming on to our next point, number 7, reconciliation of input tax credit. Once again, this process is an exhaustive process which challenges us during the filing of annual returns GSTR 9 and 9C. In order to ease that process, it is advised that you reconcile your ITCs in the month of March itself. All those ITCs which are available as per 2B, which you have already filed as per 3B, ITCs which are showing in your books of accounts, a proper reconciliation statement of such ITCs must be made clearly, so that if there is any ITC which has been left unclaimed, or any ITCs which is actually ineligible but you have claimed, there is a chance of reversal in the month of March itself. What does this imply? This implies that your books of accounts and the electronic credit ledger as per the GST portal or the cash ledger must tally and reconcile at its own pace. Hence, it is very important to note that your electronic cash ledger, electronic credit ledger, reclaimable statements must tally with the books of accounts for this particular financial year. So March is a very important period in order to reconcile for your entire financial year. In addition to the reconciliation of ITC, please note that if there is any ineligible credit or common ITC which needs to be reversed as per rule 42 or 43, that is also to be looked into. Next, point number 8 is RCM. RCM being a very critical point during departmental audits, during show cause notices. RCM is a key area that needs to be reconciled. So it's better that you reconcile it in the March itself. Major implementations with regard to RCM has been made during the financial year 2024-25, effectively 10th October 2024, where RCM category has been broadened to bring certain other services under RCM. Self-invoicing has been made mandatorily, and it has to be done within a certain period from the receipt of your inward invoices. That needs to be checked whether you are complying with your RCM provisions. That needs to be checked whether you have deducted or paid RCM on certain inward supplies for the entire financial year, whether you have missed out any payments on such supplies. That needs to be checked and can be paid in the month of March itself, so that this reconciliation process eases out during the filing of annual returns. Next, number 9, declaration to be received from a goods transport agency. As we all know, goods transport agency has an option of charging GST on a forward charge basis and also not charging GST. That becomes the recipient will have to deduct, has to pay tax on RCM basis for such GTA. For that, you need to get a declaration written in hard copy from the GTA that whether he has opted for a FCM basis or whether it will be continued as RCM basis for that particular GTA. This particular declaration should also be complied with. Finally, point number 10, and it's a very important point, is that as we all know, the GST Council have introduced this amnesty scheme for the initial financial year of 17-18, 18-19 and 19-20, where the interest and penalty waivers are present for any orders, for any show cause notices, for any kind of disputes that has happened between GST and the registered dealer. The last day to avail this amnesty scheme is 31st March 2025. So get hold of your litigations, clear your litigations, avoid this extra penalty and interest by applying for the GST amnesty scheme. I'm sure many of the dealers have already been receiving emails from the department with regard to availment of this amnesty scheme. Hence, we have discussed 10 important key points which needs to be kept in mind for the March 2025 with regards to GST. I hope this particular deliberation will help you to some extent in fulfilling these criteria where you can avoid future GST litigations. From our team, we wish you a very happy year ending.